Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about JIANGXI Copper Company Limited, latest report. JIANGXI Copper Company Limited offers a diverse range of businesses and services across various industries. At its core, the company engages in mining, beneficiation, smelting, and processing of copper and gold. Its operations span multiple segments, including copper-related industries and gold-related industries. The company's extensive portfolio includes trade, finance, new materials, engineering construction, equipment manufacturing, information technology, energy conservation, and environment protection. Additionally, it is involved in the extraction and processing of precious metals and scattered metals, as well as smelting, rolling processing, and deep processing of non-ferrous metals. JIANGXI Copper Company Limited also engages in research, development, production, and sales of copper materials, manufacture and sales of wires and cables, and trade of related products. Its services cater to various sectors, including mining, metallurgy, construction, and manufacturing, making it a comprehensive player in the industry. The JIANGXI Copper Company Limited market capitalization of $157 billion is significantly larger than the average industry peer of roughly $6 billion. This shows that JIANGXI Copper Company Limited holds a significant advantage in their industry. JIANGXI Copper Company Limited trades at a lower price-to-earnings ratio of 15 times and a higher price-to-book ratio of 1.34 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 55% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 5.24%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the extracted summaries. On one hand, the company has experienced significant revenue growth due to various factors such as an increase in sales of main products, particularly copper, gold, and silver, which have seen year-on-year growth rates of over 20%. The growth in new energy vehicles, data centers, and optimized power investment structure have also contributed to the revenue growth. Furthermore, strategic investments in companies such as JCC Hongyuan Copper Industry Co., Limited, and JIANGXI JCC Environmental Resources Technology Co., Limited, have yielded substantial returns, adding to the company's revenue. On the other hand, a sharp decline in copper smelting and processing fees, decrease in sales commissions, and increase in wages and welfare expenses have led to a decline in revenue. In terms of product/segment growth, silver, sulfuric acid, and tellurium have seen significant year-on-year growth rates of 13.92%, 16.44%, and 18.53% respectively. Copper contained in self-produced copper concentrates has also experienced a notable growth rate of 35.15%. Regionally, mainland China has seen an increase in revenue, while Hong Kong and other regions have experienced a decline. Overall, the company's revenue growth can be attributed to its strategic investments, effective response to global market trends, and optimized business operations. However, challenges such as declining copper smelting and processing fees, decrease in sales commissions, and increasing expenses have led to a decline in revenue. The net income of the company underwent significant fluctuations between 2023 and 2026. In 2023, the net income was $1.13 billion. However, by 2025, it had plummeted to a staggering minus $2.02 billion, indicating a substantial decline in profitability. The following year, 2026, saw a notable increase of $167 million, bringing the net income back up to $7.13 billion. The profit margins also experienced changes during this period. Unfortunately, data for 2023 and 2024 was not available due to missing operating income information. In 2025, the lack of operating income data again hindered the analysis of profit margins. Nevertheless, in 2026, it was observed that revenue increased by 5.42%, while cost of sales rose by 4.5%. This led to a decrease in profit margins due to factors such as overcapacity and intensified competition in ordinary copper product processing. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. The data shows that the company has been able to produce positive operating cash flow in both the second and first quarters of the year. In the second quarter, the company generated an impressive $3.416 billion in operating cash flow, demonstrating a substantial increase over the previous period. This suggests that the company's business model is yielding strong results, enabling it to generate significant cash from its core operations. The fact that the company has been able to maintain positive operating cash flow across both quarters indicates a high level of financial stability and resilience. This is a key indicator of a company's ability to sustain its growth trajectory and weather any potential economic downturns. The company's debt level has undergone significant changes in the recent period. While long-term borrowings have decreased substantially, down by 52.29%, a notable increase is observed in non-current liabilities due within 1 year, rising by 72.81%. This mixed trend suggests that the company has reduced its long-term debt burden, but simultaneously increased its short-term liabilities. In terms of interest expenses, there has been an increase of 8.2% compared to the previous period. This rise indicates a higher financial cost for the company, which may be attributed to the increased non-current liabilities due within 1 year. The combination of these changes highlights the need for the company to reassess its debt management strategy and explore ways to optimize its interest expenses. Based on the extracted summaries, it appears that certain segments of the company's business have outperformed others. The copper-related business segment stood out as a strong performer, with significant revenue and profit before tax figures. In contrast, the gold-related business segment struggled, with lower revenue and profit before tax compared to the copper-related segment. The disparity between these two segments is notable, suggesting that the company's focus on copper-related business may be paying off. Conversely, the underperformance of the gold-related business segment raises questions about its future prospects and potential areas for improvement. Management is closely monitoring exchange rate changes and national foreign exchange policies to ensure prudent decision-making. The company aims to enhance its ability to predict international exchange rate trends and respond flexibly to price fluctuations in key metals such as copper, gold, and silver. In determining product prices, management references LME and Shanghai Metal Exchange prices, which can be volatile due to various global economic factors. These include supply and demand imbalances, market expectations, and speculations. By closely monitoring these factors, the company seeks to make informed pricing decisions that balance its business needs with market realities. The company's financial performance is reflected in its dividend payments. According to the provided information, the company has indeed paid dividends. This can be seen on page 68, where it explicitly states dividends. Yes, and further confirmed on page 69 with the statement, the company has paid dividends in 2025. Additionally, page 70 also indicates that dividends were paid, marked as dividends paid, yes. There are growing concerns about inventory buildup in the industry, driven by several factors. One of the primary concerns is the increase in inventory costs due to rising prices. This has resulted in a significant surge in inventory levels, with some products experiencing substantial increases. For instance, copper cathode inventory has seen a staggering 49.73% rise compared to last year. This buildup of inventory raises questions about the efficiency and effectiveness of current supply chain management practices. The industry must address these concerns to prevent further accumulation of inventory and mitigate potential losses. However, it appears that there are no specific concerns about supply chain disruption at this time. That concludes the financial summary for Jiangxi Copper Company Limited. Feel free to comment below, and I will be happy to answer them when possible.